Michael Burry is warning you, stop using the credit cards. Cue the fire. You guys are out of cash. This is what we're seeing. Within the next few months, you are as dry as a lake, or as dry as a 70-year-old soccer mom. My apologies. I want to keep my 70-year-old soccer moms. So looking at this, oh my gosh, this is the Germany, the Moselle, the Rhine River. Now it's not, it's just Rhine. That to me does not, you can't even put boats. Oh, you subscribed so early. Thank you so much. And I don't ask you to subscribe. I just want you to check to see if YouTube unsubscribed you. But we have household debt at an all-time high. Congratulations. Pop the confetti. I said, Skylar, pop. There we go. Sometimes he's not listening. Oh, hold on. Yes, hold on. He's calling me. Yeah, what's up, buddy?
Your wife called again and she said, I can't understand why my credit cards keep getting declined. Every time I log into the account online, it says, I have an outstanding balance.
Well, you tell her that outstanding doesn't mean outstanding. It means like she maxed her cards out. She doesn't have any more money. Which actually, that's kind of a good idea. I guess that's it. We're all out. Well, except we're paying like, what are we paying? 24% interest rate. Man, I wish I could make 25. You guys are really paying somewhere between 14 and 25%. This is just normal. This is bankrate.com. This is what everyone's paying. Oh my gosh, 27%. I have some farmland to sell you because that would actually be a smart investment right about now. 26%. Oh my gosh. You guys out there with those credit card balances, you better pray the Fed pivots because that 10-year does affect you. Big Short. We're going to go over this. He's going to say something, then we're going to go back in the charts and you're going to go, oh, this is how I would trade it. Okay. We're going to match up yesteryear to now. And now you'll go, oh, now I know why you get scared. But Big Short, Burry, that's not a scared face. That's a concerned face. Michael Burry issues a grim warning. Okay, here it is about runaway consumer debt. That would be all of us. And says the stock market rally, here, let me highlight it here, won't last. And I will show you in the charts that it won't last. So stick around. Michael Burry warned Americans are loading up on credit card debt. Yep. Why? Well, first, they got used to it, right? Stimmies. $10 trillion worth of just free cash. You get used to it, right? You get, oh, I'm comfortable spending. I'm spending. And then it's gone. You're like, well, but we can still keep spending and spending and spending. Well, you probably shouldn't have. Burry expects consumers to run out of cash, what? Within months. I'd say you're pretty much at zero right now. So you're hitting zero, you're going into the credit cards, and then that's it. Well, unless you're like, hey, our house is worth so much right now, let's refinance. Which the people in the refinancing community are like, our phones are blowing up off the hook. People are refinancing. Really? At a 6% rate? Good job. Hitting company profits in the economy. Where do profits come in? That would be the stock market. Well, kind of. It's kind of just a beauty contest. That'd be more so the bond market. But he also says investors cautioned the recent rebound in tech stocks was unlikely to last. So let's play a game. So this is where we are currently at. Right here. QQQ. You can trade that. You right click and you click buy or sell. 330. That's currently what it's at. And everyone's like, oh my gosh, I could have made so much money from here to there. I wish there could have been a tool that I could have. Oh, really? Like a beatdown and one close above the Bravo 9? That one right there. You're still hanging on. The only problem is you're below the 200. So you cannot swing trade it based on my fundamentals. Or not so much fundamentals, but rules. Also, if I turn on Lux Algo, guess where you're taking profit. These are just things that I'm going to point out later. We're going to play this game back in the day. You see, retail right now is all excited. They're like, I'm all in. I'm not missing out on this one. Your RSI, it means this is, when it's up here, it's overbought. Everyone is buying it. Oh my gosh, I don't want to miss the boat. And then your MACD, which is right there. Right? We're starting to cool off. And let me pull it and make it a little bit bigger for you. See, this is where you buy, okay? And then it goes up, 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 up. See above my head, my finger will get cut off. Up there, do you see this right here? It's rolling over. It's like, oh, it's cooling off. But you're not. So let's go back in time and trade this thing. All right, let's push play. See it go? Oh, okay. See that area up there? You're taking profits. Okay, so we're good. We're above the 200-day moving average. Everything is fine. Well, until then, it's okay. Okay, we're not. Oh no, that we ain't fine. And I just want to know who was the one that that had a market order. Oh my gosh, you were so not fine. That's a 36% candle right there. Now I don't know how accurate that is. I'm gonna say it was like one trade. Somehow it just got put on the books. Karen's like, wait, 63? Wasn't it just at 98? But it's okay now. We're above the 200. We tested the 200. Let it roll. Okay, we keep bouncing on it. You see that? We're like, oh, this is signifying there's trouble ahead. And when I tell you that we have trouble ahead when it comes to the bond market, these inverted yield curves that we haven't seen in decades, I'm telling you, the bond market is telling you that 2007, 2008, it's coming for you again. Or like this one. Okay, so now you're out. You are out, right? That's it. We broke below the 200. We're not trading it. It gets back above. It drops. We're not trading it. Oh, and mind you, see, these people that lost, 50% or whatever. I don't know about that one. But I mean, look at the difference. Oh, we're up. I could have made so much. You would have, because it would have been above the 2. There's a 40% move right there. So you do need to understand that in bear market rallies, you have ridiculous moves. I just try to keep you protected from the falling downstairs, and that would be the blue line. I'm like, you can fall upstairs. I would much rather you make mistakes falling up than Karen over there, who fell very far down. I also do have a lot of Karens on this channel. This is not derogatory. I just happened to pick a name. All right, so here we go. What are you gonna do? Okay, we're gonna swing trade it. All right, great. We took a swing trade. We came above. Let's see. Let me pause it here. Oh, you gotta exit now. Let me turn on my handy dandy little plug-in. Comes in the course. 70% off, link in the description. On this one, right? You got your beat down, your 200, you ride it. Oh, all the way up. You take your 13% and you go home. And then, what are you waiting for? You're gonna wait for the next bounce. But, well, we're under the 200. See how it's hitting its head? It's really struggling with that 200. It's okay, you're out. You made your 12%. Other people are making their beds right now. You're saying, nope, I'm not playing this. I'm not going to play this game. I know, but Bravo, wait, hold on. Pause this for a second. You could have made, and this is what happens. People are like, oh my gosh, the market rallied almost 20%. 20% rally. That's exactly what just happened. But look how far you're like, oh no, we're going to make it. We're going to make it to that 200-day moving average. We're so close. But it looks like you're so far away now, right? Where'd the line go? It's nowhere to be found. Actually, let me pause this. It is definitely nowhere to be found, right? Look at this. Look, please. I'm trying to help you not lose all of your money. And let me just pull back so you can see. You will get above the 200 again. So just wait for it. On this was really bad. And oh, look at these bounces. Look at from the top, and I'll leave Lux Algo on for you. If you ever want those different colors, link in the description. That's almost an 84% from the top. And this little blue line right there would have saved you from that. Oh, and just in case you wanted to know what it would have saved you from, it would have saved you from that one. You would have been able to run it all the way up there. Look at that run. Huge. Would have saved you right on that one, right? What's another one? How about this one? Right there. Yeah, you remember that one 2 years ago? Would have saved you. And now last but not least, would have saved you again and again. And you'd be taking profits right now when everyone's going long. Let me just draw some arrows so you can see. This is the RSI. This is in my swing trading course and my advanced course, both of them. See where we get overextended right here? What happens? We have a pullback. What happens after this one? Let me move this up. We do, oh wow, it's hard to get it up there. That's probably just comes with age. We have a pullback. How about this one? Hits its head on the 200. Oh wait, how about this one? Right? Look how extended we are. And I said it's probably going to hit its head right there, right where you should be taking profits, and then the pullback. When I guess we could just do this all day long. There's this one. Let's see. We found another one. That one still had a little bit of a push before it finally collapsed. We had another one right there. And then the collapse. You guys get it? It's all in the charts. But right now they're like, oh my gosh, the bear market's over. Everything is fine. Hell, I even think Jim Cramer was saying in December bear market was over. Oh, it kind of wasn't there, Jimmy. You missed it by that much. And I know some of you in my swing trading audience, you're dirty. I know you're like, I don't care. I know we're under the 200. I'm still swinging it underneath your 9. Would have been the last one. That would have been too full. Those are green though. A lot of times I like to keep my positions open, but we're just going to pretend. So what are you guys up? Please. Okay, so you're up about 14%. Come on. Congratulations. You did it. Take your profit. Also, if you want to learn how to do it, you take your mouse, because I know they don't teach how to do it in school. Right click. You click trade. You click buy. Just like that. And then you'll have this thing come up. Grab this one to the far left, TradeStation. They'll give you $150 of actual cash. You just have to fund it with $500. I think it's pretty good. If I fund it, you can get the $500 back. Like if you're like, okay, I'm done. Thanks for the 150. But you start with paper trade. Also, you could just do this. This is not a time to buy. Okay, this is almost a time to sell. You kind of have that confirmation. You're going bass backwards. If you really want to buy down here, see where that crosses on the MACD right down here. See those two lines? They diverge, converge, diverge. You buy there. When they cross, you sell. Or like right there. See? Boom. They crossed. And so you would have bought it. You would have bought it. I can't get my mouse up there. I'm having mouse issues. Right there. Was that it? There? All right. And then you ride it all the way up. So here you go. This is you sitting on your floor with no furniture in it. Well, that's good. Unless they just removed all the furniture. So you're sitting there with all the bills piling up. Well, CNBC has a solution. A new report shows American household debt is what? All time. It's never been bigger. You guys are fully maxed out, leveraged. I don't see anything possibly could go wrong with this. Here are 5 simple steps to help you pay off your debt. Let me guess. It's ads that... what are they having you do? Anything? List all your debts. Oh, so to make you more depressed. Decide which debt to pay off. Okay, that's good. Snowball. Anything else? Oh, debt consolidation. That's a terrible idea. And if I can help you solving this, make more money. That's it. Make more money. Wait, so if I make more money, that means I can pay off my debt. Well, that would be right. Hey, get side hustles. I don't care. Whatever you have to do. Make more money. And then with that money, okay, whatever you're making, but I work too much already. I know it's always, you look at the reports, the people that haven't had jobs are like, F it, forget it. It's the people like probably me, you who are watching this, we're like, yeah, we currently have 5 jobs and 10 businesses. But take that money that you get from whatever, Uber, I don't know, and put it into an account and just swing it. Or I guess we could just tighten our belt, right? Like Dave will tell you, tighten up that belt, spend less, blah, 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 pay off the mortgage, not so fast. I say not so fast is right, Dave. Number 1, you'll never pay off the house. It's not possible. All right, they tricked you. Rug pull. You still got to pay every single month. You really think the government's going to allow you to own a property? Oh, wait, I think that's in the Constitution. Oh, but Dave does have inflation survival tips. Here's your survival tips. Get in a time machine, go back in time, start businesses, sell junk, plastic junk on Amazon. Find out where there's 10,000 searches for one thing that no one's selling and target them. That's why I spent probably the first 2 years on YouTube teaching my high school students, my college students, how to sell stupid plastic junk online. And then after you do that, we scaffold. We then take that money and we trade it. But I mean, Dave would probably say invest it. So just put it in the S&P 500 and pray. But for me, that's way too much risk. I won't do it. But I do understand it is sucky times. It's going to get better. I pinky promise. Not like the president, where he currently says inflation's at 0. You're perfectly fine. Nothing to worry here. Government always has your back. Unless they're carrying a knife, and then I'd probably run. Food at home is what? It's up 13%. From a year ago, today. Most since 1979. So even though you're like, I'm going to stay at home, I'm going to tighten the belt, cook at home, it's still going to cost. Are you making 13% more at your work? Probably not. That's why I jump up and down. You got to do it. Side hustles that are passive, right? Do passive income so you don't have to work so hard. Not that it always works, because they fail a lot of the time. A lot of the time, not a time. But look at the CPI, 8.5%. Always put a 1 in front of it. Whatever the government says, put a 1 in front of it. More like 18%. You would agree with me. Food, 18%. 100%. That would be 110% on that one. So maybe I'm pushing it. Oh, and then CPI energy. They don't like putting that one in there. 33%. Yeah, put a 1 in front of that. 133%. And I do know out here in Austin, people's rent, oh my gosh, rent doubled. So many people are like, they doubled my rent. And even though I believe inflation's going to come down, it's an ebb and flow. I think big picture though, I don't see a way out of the economy, the way the system is set up monetarily, and not just us, the entire world. This is not good. And that's why I always say, make sure you have a property with food and a water source, because when it really hits the fan, which it will, you're not going to want to be in Austin. So this shout out to my builder, please hurry. No path out. None. You're not getting out of it. And this is oblivion for Russia. Yale University scientists believe. Well, and I could do stories that people hear. Bond market players, all of my macro friends, they're just like, man, this one's going to be bad. My YouTuber friends, all of us that do research, you go back in time when you have anytime you have a yield curve inversion, not just the euro dollar inversion. It was 07, 2000, and now this one's serious. This one's huge, but it hasn't happened yet. So you haven't felt it yet. You wait. And how fast, do you ask? Maybe sometimes it takes quarters. Like Putin's war sends Russian economy back to 2018 in a single quarter. And we keep repeating the same things throughout history. We have pandemics, we have droughts, we then have war. See, what are we missing here? Oh, here's the drought. We just haven't got to the last one. Here's England. Total water in England's reservoirs is at lowest level since 1995. Come on, Bravo, it's not that bad. Not yet. Nothing left in the pipes. French towns rely on what? Water truck deliveries for their survival. And that's how the game is played. No, food starts getting limited. Definitely water. It's a coming. You can see it. Well, you can't see it. Pandemic already went through that. Some pretty bad inflation went through that. Wait until we go into the deflation or the depression. We hit recession first, then depression, unless the government officials tell you, no, this is not a recession. This is not a depression. Just get in those food lines. Everything is perfectly fine. Just vote for me and we will be happy. No, I don't have a plan. I'm actually getting a lot of people on this channel. I'm like, give me your worst case scenario. So hopefully next week I'll have a few people on, and then the week following. So I'm like, no, shut up. Give me what do you really see? Things that you wouldn't talk on your channel, but you can talk on mine because I'll take the dislikes. But if you've made it this far and you haven't hit the like, appreciate it, and I'll see you tomorrow.